Alrighty, hello everybody. It's 10:31, and I think we have the majority of folks that signed up to participate on this call have logged on. We are always experimenting with how to best leverage technology to serve you guys. I'm real interested in your thoughts about how this goes, if this technology is functional for you in your school. So please let us know, and if it's just a catastrophe, let us know that. Most of the time, I find educators are too nice, and those of you that are principals that I've yelled at for being too nice in evaluations, you know that. One of the things that Bobby and I talked about and how we wanted to manage things is how to manage questions. It's hard with 50 people on a webinar to have folks hopping on and off and asking questions orally. So I've got the settings here so that we cannot see anybody's video, and we've got you all muted so that we don't have any problems of crosstalk, of you hearing somebody else's school's side conversations. So we're going to try to use the Zoom chat function to allow you to ask questions. If you look on your screen down at the bottom, there should be a little button called chat, and it has like a thought bubble like a cartoon character would have. If you click on that, it should open up off to the side a Zoom group chat. And I've written 2 messages to the group already to sort of get you started. So if questions occur to you just as we go along, you can shoot those out to that chat. Bobby and I then can see them as you ask them. We may answer them right away. Oh, Jeff Edwards, you're my favorite.
There's one in every crowd.
And so we will answer those questions either as they come in, or we might, if we got something we want to get through, we'll stop and then answer them. So if you're shooting questions to us as we're talking, don't worry about that. Shoot them as they occur to you, and then we'll either answer them as we go or when we come to a spot where we think it works. We are recording this, and then I will post this as a YouTube video on our website. We will also post the slides that Sherry sent out and the forms to our website, and then we'll just I don't know if you want an email back or if you can just go to the home page and click on it there. That's what we'll probably do. Okay, I think that's all the housekeeping stuff that we wanted to talk about. And so we do have slides, and we'll jump in and out of the slides. So sometimes you'll see me and Bobby's messy hair, and sometimes you'll see the slides, and hopefully that all works really well. So share screen. This is the part I don't love. I wish I was faster with this. Okay, and then we want to F5. Okay, so you get started.
Okay. Well, I think many of you have received these health insurance marketplace notifications, and if you haven't, you will. But basically what happened here at our shop is Karen and I started to get emails and phone calls from folks who had received them, and they were kind of coming in batches. And as is the case with so much of this Affordable Care Act stuff, while it seems, it's unique to you, it's unique to your individual school, as we look at it, you all kind of have the same considerations. So we figured rather than try to, give the same answer multiple times, much like the Affordable Care Act reporting stuff, that webinar that a lot of you attended through the ESUs and through the DL, we figured it might be best just to kind of give you an overview of what we think this process is and how it ties into the other advice we've been giving to schools about the Affordable Care Act. So the purpose of this is just to kind of give you an overview of that. And we'll talk about some of the specifics of the Affordable Care Act as we go. So one of the things I think that we want to make clear is we're not trying to duplicate stuff that you already know, but in order to respond to these notifications and kind of know about this appeal process, you do have to be pretty fluent in Obamacare. So we're going to talk through some of those things as we go too.
One of the things that Bobby and I were talking about yesterday is struggling with kind of how to conceptualize where we are in the implementation of the Affordable Care Act process. And then I found this cartoon last night. I fell in love with it because this is exactly where we are. Lots of you heard us for years say, take it slow. Obamacare is going to roll out, piece by piece. You don't have to know the whole thing at one time. And where we kind of are now with this health insurance marketplace appeal form that some of you have gotten is that we're kind of crossing the bridge from all of it being theoretical to actually beginning to implement what Obamacare is going to look like on a live basis. So all of you probably have staff members, either a para, a substitute teacher, somebody that once cut the grass. I mean, someone that's at some point in time gotten a paycheck from the school. All of you, I think, have somebody that has gone onto the marketplace and bought insurance from the exchange. So what this form is it's really the link where we're connecting the individual ability to get insurance on the exchange with the question of whether or not an employer has to pay a shared responsibility tax. So this appeal form, the most important thing for you to get from this today, I think, is this appeal form is not your one and only chance to tell the federal government that you shouldn't have to pay a tax for any individual employee. This is one step, it's one link in the chain of ultimately what this whole system is going to look like when it gets implemented.
One quick thing to add on that point too, we've got several people who are small employers on this webinar. That's because when the IRS sent these forms out, they did not discriminate on the basis of whether you are a large employer, right? Whether you have 50 or more employees when you do your large employer counting versus a small employer. Because this form was sent out to anybody who claimed your district, as their employer, either now or at the time that they applied for the exchange. And then they made the determination, not at the exchange level at that time, and we'll talk more about how this works, but they made the determination that employee was eligible for credits on the exchange. So one of the key things to figure out is exactly like Karen said. For those of you who know you will be in this, what they call the pay or play mandate, where you have to have gone through offering insurance and all of that because you're a large employer, this form has that particular significance to you, and that it's one step, sort of the first step across that bridge of theoretical to what the Affordable Care Act is intended to do. But even for you small employers out there, and this sort of helps emphasize this point, you may have received this form too. Because what this form ultimately is yes, one of the steps across the bridge, but also it's the government using you to verify whether or not that employee was truthful to them, or whether or not that employee's situation when they applied for the exchange remains the same as it does now, or as it is now. So if you're a small employer on this webinar, this is not wasted information. All the things that you've listened to us talk about with the Affordable Care Act will still be useful to you, but you're sort of, I guess, on a different bridge, or you don't have to cross this bridge fully, but this still is a step the government expects all employers to take.
The best way I was thinking about this last night is if I'm a substitute teacher and I subbed one day at Arthur County High School and one day at North Platte High School, I could have listed both of those schools as my employer. I wouldn't qualify for insurance really from either one of those schools. You'll have different reasons from those two schools about why you should not have to pay a shared responsibility tax, and yet both schools would have gotten this form and will respond to it in pretty much the same way. Mm-hmm. So you just have to kind of understand that this is just one step, one of many bridges that we're crossing in the whole Obamacare system. Okay, so you take this.
Okay. Well, so what we wanted to do, and I've given this presentation once, I think, at NASBO, if any of you have seen it, but basically I started to get the question after people kind of started figuring out, okay, what does it mean to be full-time? What does affordable mean? The question started to turn to, so how does this actually work? Let's assume we have an unaffordable offer of insurance. How does the IRS know that, and how do we ultimately get to the point where they're saying you do or you do not owe a tax on that particular employee? So the IRS is issuing what they call, or what we call, 1411 certifications. Let me just make clear right now up front, a 1411 certification is exactly what you're holding in your hands. It is this health insurance marketplace notice. If you are like Karen and I and you like to have it in front of you, if you flip to the very back page, it actually says right below where they sign "Sincerely Health Insurance Marketplace," the information provided in this letter is based on Section 1411 of the Affordable Care Act. So when we say 1411 certification,
okay, so for those of you that are watching, I'm going to put my finger over the name. This is what the form kind of looks like if you've gotten this in the mail. And I think Sherry's sent you the appeal form.
Well, we've got screenshots of what the form looks like. But what I'm saying is,
and so this is the third page. So those who, but I mean, for those of you that have gotten this for an employee, I wanted you to be able to navigate to what we are talking about. Okay, go back to share screen and go there.
Okay, so you've done all of your kind of thinking at the district level And so the way that the IRS says this process works is they send you this form, right? The one that says, dear school, your employee is on the exchange. They've told us that either you didn't offer them coverage or your coverage was unaffordable or they had some sort of elongated wait period. So they told the IRS that when they applied, and we'll go through this step by step how that works, but we wanted to give you the overview to show you where this fits in the process kind of before we get into the details of it. So they sent this form to employers, this 1411 certification, also known as the Health Insurance Marketplace Notification, to let you know that you do have an employee on the exchange. Then the second bullet point here, as you'll see, says that the employer can challenge the information on 1411. Those two bullet points, that's where we're at today. Right, that's where we sit here giving you this information. If you keep looking down, though, I'm just going to pull all of these up here. After you send in your appeal or not appeal on this 1411 certification, then the way that this works in the IRS process is if you're a large employer, then you'll send in your 1094 and 1095-C reporting. Right, we've all been through that process once now. So the IRS sent you this notification. You may or may not challenge it based on your determinations after the webinar today. And then you're going to do your 1094 and 1095-C reporting like you did last year in the beginning of 2017. Then the IRS is going to take all of this information, which includes this 1411 certification and your appeal, your 1094 and 1095, the employee's W-2, the income statements, whether it's W-2 or some other version from anybody else who's considered part of that household. And they're going to have, Karen and I call their little elves, the 5,000 people that they hired to look at all this. They're going to jam all that into a folder and then hand each of those folders to one of the elves who's going to look at all of these things that have been submitted and make the assessment of, is this somebody who might potentially subject the district or any employer, but in our case, the school district, to a potential penalty. So after they make that initial determination that, okay, we think this person is somebody who could subject the district to penalty, now we're going to send something else to the school, which is an actual notice of a potential penalty. So you'll see as we look through these forms, multiple times they will say things like, this is one step in the process of determining whether or not a large employer might owe a penalty, but this is not the form used to make that assessment. That assessment won't be made until next year at least, and on an ongoing basis after the calendar year is over retroactively. They'll be looking at all this stuff in that folder. Then they may send to your district a notice of potential tax penalty and say you didn't offer affordable insurance and this person went to the exchange, therefore you owe us a tax. At that point, you'll also have another chance to respond to the IRS and say, no, we don't owe a tax for this reason or that reason. That's when you're actually going to get into a lot more of the stuff you know about Obamacare. After that, the IRS may come back and say, nope, we still think you owe a tax. You can then appeal that again if you want to. And it wouldn't be until all of those things have happened. This 1411 process, the reporting, the little elf looking at the information and sending you a letter, you then having another chance to respond to that letter, them responding back, you responding again. At that point, they may then say, nope, I don't care what you said, employer, you owe this tax bill. So the point of that is really just to show how this fits, this 1411 or this health insurance marketplace notification process fits into all of that so that you don't have some impression that this form is more or less than what they actually intended to be.
One of the first calls I got from a school that had received this 1411 form was a teacher that had subbed for the district for 3 days total in the prior year. And I got a little bit fired up thinking, this is what we're going to have. We're going to have all these people attempting to defraud the school district and blah, 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 blah. And I just have to keep reminding myself, and y'all need to remind yourselves, this is not like an unemployment application. The fact that this substitute teacher would qualify for a subsidy on the exchange, that means nothing to the school district in terms of what the school may have to pay. I think Bobby's right. If you think about this form as the IRS making us do their legwork in terms of whether or not the employee is entitled to a subsidy on the exchange, that is totally different than whether or not we have to pay. I know that it seems like we're just sort of anal retentive about saying it's not a penalty, it's a tax, it's not a penalty, it's a tax, but this is where that matters, right? The money that you as a school district would have to pay if you do owe a tax, that money does not go into the pocket of the employee that you have not given insurance, that's gotten insurance on the exchange. By the same token, the fact that somebody got insurance on the exchange and qualified for a subsidy, that doesn't mean that you have to cover that person's subsidy. And so if you unlink those things in your mind, then I think you can make more rational decisions about what you're going to do with these appeal forms, and also understand where we are in the process. Because right here, this is where we are. Whoopsie doodle, page up. This is where we are, that second bullet point. So all of those steps that are below the red are steps that we will have to go through later, and are opportunities for us to claim that somebody's not in, that we don't owe a tax penalty, which again has nothing to do with whether or not they get a subsidy on the exchange.
Yep. Okay, so there might be some questions about that. If you have them at this point, shoot them in using the comment function, but we're going to roll through at least the first part of this before we get to the forms, and hopefully that will answer a lot of your questions, a lot of the stuff that we've been talking about here. Okay. So these are really what we wanted to do is kind of break this down in terms of the common Obamacare lingo that we've used for all these different considerations as we've talked about this. These are the ones that I think you should understand and know if you're the person at your district who's been tasked with deciding whether or not we're going to appeal and what that appeal will look like. The concept of having made an offer of insurance versus not having made an offer of insurance. This is an interesting one because as we've talked to many schools about many times, the Affordable Care Act says that you must, make an offer of insurance to your full-time staff, all of that. But that term offer means something. So what I want you to do, if you're the person who's charged with, okay, we got John Doe's notification letter, are we going to appeal on John Doe? One of the things you need to think about is, have we made John Doe an offer of insurance? The reason we say that is we know that many districts have not yet offered John Doe insurance because they have transition relief until September 1st. So if you were to fill out the form and send it to the IRS right now, you'd have to tell them we have not made John Doe an offer of insurance because even though we've given him the paper, he doesn't have the ability to enroll in that insurance until September, right? So he hasn't, in other words, you have not satisfied your obligation until the point that John Doe could otherwise enroll. What that means, though, in particular for districts who have offered insurance to folks in the past.
And let me just jump in. And this is the example Bobby and I were using yesterday as we were talking through this. Sally is a teacher, but her husband works for the railroad and he gets awesome insurance and she's better off to decline your insurance. So she's never taken the insurance. But you hired Sally 15 years ago. So now the question is, have you made Sally an offer of insurance?
Because the Affordable Care Act says that to make an offer of insurance, you must offer that person at least once per year.
Yeah.
So the issue with Sally was exactly what I was going to hit on, which is no, that's fine. It's a perfect example because it happens a lot. That person could have enrolled when they started. I think the question that you need to ask yourself now is, at any point in the last 2 years, so either before the 15-16 enrollment year or now, have we had open enrollment in our district? If Sally came to us and said, hey, my husband's no longer working for the railroad, now I'd like to enroll, what would you say to Sally? Would you say to Sally, sorry, you had one open window 15 years ago and now you're not eligible? Or would you say to Sally, yep, no problem, I understand, your husband got fired, that's a qualifying event, you can certainly still enroll in the district's insurance. That distinction, though, might be the difference between whether you can certify to the IRS that you've made an offer or not. So what to think through, at least initially for PACA consideration purposes, is that employee that's listed on this health insurance marketplace notice, or the one that will be when you inevitably get one of these, have we made that person an offer of insurance? So that might be something to think through, and if you've got questions about that, let us know. The second part of it is this concept of what's affordable versus unaffordable insurance if you've made an offer. We'll talk through more about that as we go, but this is obviously one we spend a lot of time on as we talk about the Affordable Care Act, because as your boards make the decision with respect to what you might offer this new subgroup of classified employees, one of the things that I've talked to them about, Karen's talked to them about, that we've said all along is, you as a board need to make the determination of whether you want to guarantee your insurance is affordable or whether you might not know the insurance is affordable when you make the offer you're thinking. Like, for example, a 50-50 split of the single premium. If your board has offered that to your staff members, that may or may not be affordable. So you, as the person responsible for filling out this form, for the reasons we'll talk about, need to understand whether that offer may or may not have been affordable to that particular employee. So this has not all been wasted information the last 5 years. You learning that for the purposes of helping your board, but now for all this appeal and 1094 and 95 reporting and all of that business, should be familiar with what that means. So we'll cover that briefly. And then the final thing is the affordability safe harbors. We kind of stopped talking about these as much because I think
I hate those safe harbors. I hate them.
either you have sort of wrestled with the safe harbor options that you might have, or you haven't. But in either case, if you're not familiar with the different types of affordability safe harbors, you should get yourself to that point if you're the one responsible for filling out this form. Because even if it's not a decision that your board made, that, hey, we're not going to offer the full single, but we'll offer enough of it to make sure that we meet the affordability safe harbor. You need to know that when you're certifying to the IRS that your offer may or may not have been affordable for that employee. And we'll show how that's important on this form as we go. So really, those are the three things that I think you've got to sort of know. Those are the words of the Obamacare language you need to be able to speak for assessing whether or not you should make an appeal.
I'm going to keep talking. I'm going to stop sharing. Mute all. Yes. Okay.
Okay.
Now, how do I make
There you go. Close out.
All right.
Okay. Okay, so this is just kind of a brief slide to point out to you, interestingly, the things that are not relevant for purposes of this 1411 certification. For example, if you have in your mind that this means I'm going to pay a penalty, one of the things instinctually you might be thinking is, oh my goodness, I'm going to say we're a small employer. But that, if you read through this form and the appeal form, that is not what the IRS wants you to tell them at this point. So all of the natural defenses that we've built up in you by presenting and talking about the ways to avoid these penalties, many of those are not actually relevant whatsoever for purposes of this 1411 health insurance marketplace notification.
That's why it's important for you to understand that this is unlinked between whether or not you owe a shared responsibility tax. This is just whether or not the employee qualifies for a subsidy. So if you are very proud of the spreadsheet that you put together that proves you're a small employer, that's awesome. And that spreadsheet is not wasted effort. It's just not time to use it yet for this form. The same holds true for those of you that are, everybody got some sort of transition relief, but people in particular that are 50 to 99 employees, we're all hiding behind the screen of, hey, wait, we get extra transition relief, leave us alone. Again, that's true. That's just not relevant for this form. Again, it all, cash in lieu, 125, all of that stuff is not relevant at this point in time because what we're talking about is whether or not the employee qualifies for a subsidy.
Exactly. So if you're one of those districts who said, holy crap, we have cash in lieu, does that hurt us, right? That whole hubbub that came up at the end of last year and that we'll continue to deal with, you should have figured out your cash in lieu or Section 125 plan questions now to the extent that those things affect affordability, right? So that's part of the affordability analysis. But the whole concept of we have cash in lieu, what does that mean? That's not something you're going to tell the IRS on this particular form. Okay.
All right, so now should we see if there's questions?
Yeah, let's do that real quick.
Okay, so we're going to stop screen sharing. Okay, can you read that? Because I'm blind.
If you have an employee, here's the question. If you have an employee, well, I guess you can all see it, but we'll read it for those who don't have it open. If you have an employee that filed on the exchange, and we received a marketplace notification, and they have now quit, is there anything we need to do? Yes, and that's one of the things we'll get to. The key to remember here is that person, even though they've quit working for the district, might still be eligible for a credit on the exchange, right? This is a decision made at the kind of the family or individual level. For example, if my spouse and I went to the exchange, even if she works somewhere else and I work somewhere else a few weeks later, that does not necessarily mean we're no longer eligible. In other words, you don't have to even be employed by somebody, or specifically not the same employer as when you applied, to continue to remain eligible on the exchange. So yes, there is something that you'll probably need to do, and what you'll need to do is decide whether or not you're going to appeal that person having been on the exchange.
So
yes.
if it was a teacher, and they were getting full family until they quit in April and got mad and walked out, then probably you'd want to appeal and say while they were employed, they did receive an affordable offer. If it's a para, a custodian, a cook, somebody that probably didn't get an affordable offer, and now they've quit, you may not want to appeal because it's not going to make any difference because they never did have an offer of affordable insurance from you when they were your employee.
Yeah. So yes, it's an important thing to think about whether or not they're still employed. The key emphasis here, though, is even if the substitute that subbed 3 times and just happened to be subbing the day they went to healthcare.gov, so then listed you as their employer, that triggered this form coming to you. So your considerations will be the same. You might, though, like Karen said, end up adding something to your appeal, which says something to the effect of they were employed this date to this date, and while they received an affordable offer of insurance. Yeah, we'll get to that.
Yeah, but so, and again, I'm a big one to get, ticked off and think people are trying to get over and get stuff from schools they aren't entitled to. This question, like, how can you even list as an employer? You're fired. That doesn't really have anything to do with whether or not they're not getting anything from us at this point, right? This is not seeking anything from the school district. This person is just seeking a tax subsidy on the exchange.
Okay, we have 15 minutes.
Oh crap, we gotta go.
Okay. All right. So the affordability stuff real quick, we're just going to put this on the screen only for purposes of talking about, you've heard us talking about this penalty A and penalty B that have existed. Look at the bolded part here. We're not going to talk in specifics about how those are triggered at this point or how those are assessed. But the thing to remember is if you potentially owe this death penalty because you failed to offer insurance to enough of your full-time staff members, that penalty can be triggered if only one person goes to the exchange and qualifies for assistance. So in other words, if you are somebody who's at risk of penalty A, and we can talk with you at some point about whether you are, but if you happen to be, the fact that you have received this form or that you do receive this form in the future is enough for you to know certainly now then that if you're subject to penalty A, it could trigger it just because one person went to the health insurance exchange.
The vast majority of you, I think all of the schools that we've talked to over the years have stepped away from penalty A. A lot of you may, however, be subject to penalty B, which is when you offer unaffordable insurance to your staff, and that is triggered when that specific employee goes to the exchange and qualifies for a subsidy. So if you offer full family to all of your teachers, all of your administrators, but not to your classified staff, you probably have offered enough if you offer full family at no cost, but you let paras buy, which is what a lot of schools do, you have stepped away from penalty A, but you may owe penalty B for those paras that you offered unaffordable insurance to.
Right. And the key there is John Doe alone can subject you to penalty A, but if you have 20 people who could subject you to penalty B and John Doe is the only one that's gone to the exchange, only John Doe can subject you. You can only pay a penalty on John Doe.
Yep.
So that's the important thing to remember there. Okay. So this concept of affordable versus unaffordable, you need to know it because one of the things you're going to have to tell the IRS is in appealing this form, potentially, no, we made an affordable offer.
But you have to know what's affordable versus
right.
unaffordable.
Which is where, again, the safe harbors come in. So affordability, just to remind you, for 2016, right, we always used to say 9.5%. For 2016, it's up to 9.66% of that employee's household income. So if you say to that particular para, you have to pay $150 a month, and that's 11% of that para's household income, that insurance to that para is now unaffordable. Remember the tax, we used to say $3,000, that's ratcheting up now. For 2016, it's $3,120. For each employee who gets an unaffordable offer from the district, goes to this marketplace, right? So what this form tells you is that somebody has satisfied prong 1 and prong 2 in the eyes of the IRS. And then this form now specifically is asking you to help the IRS determine whether or not they've satisfied prong 3. Are they eligible for this credit on the exchange? That also, like we said, ties back into, or in other words, is one step across that bridge of do we owe a penalty, because all of these things have to happen before you as the district might owe a potential tax penalty on that employee. So was your offer unaffordable? Did they get insurance on the exchange? And did they get government assistance? We often kind of gloss over this slide, but we're putting it up here now because you hopefully are starting to see why it's important. What does it mean for somebody to be eligible for government assistance on the exchange, right? They say in their form here, they're eligible for an advance payment of a premium credit or a cost sharing reduction. They abbreviate those as APTC or CSR. What we say is government assistance. That's kind of our term for capturing those two things. As long as that employee's household income is less than 400% of poverty, they're eligible for help on the exchange. So if I'm a single person, right, if I'm a single parent, or if I'm even, let's say I'm a single custodian, unless you, the district, pay me almost $48,000, I'm eligible for a credit on the exchange. Let's say I'm a principal and my spouse stays at home and we have 2 kids, so we're a family of 4. I, as a principal, might still be eligible for a premium assistance on the exchange so long as you don't pay me $97,200. The concept here is that the affordability line is way lower than the eligibility for government assistance on the exchange. So everybody that is triggering you receiving this form that you've got, this health insurance marketplace notification or 1411, that's somebody who the government has said based on that person's application is eligible for this premium credit. This is what they're asking you to help them verify. Okay. So with that, we've got only 10 minutes left, and we'll answer questions if folks want to stick around. But we're going to run through now. Okay, so you've got this. Hopefully you've got an understanding of the things that should be, clear as mud in your head about what you need to consider. How does this whole appeal process work with respect to this form? Remember, all of this starts at the 1411 certification that you hold. Your employee went to the health insurance marketplace and filled out an application, and the government said, yep, or the government sent their information to Blue Cross, who said, yes, you are eligible for one of these plans on the marketplace. This is something, we just have it in here of a screenshot of at least what it used to look like when you were telling the IRS what type of insurance your employer offered. So that person who subbed for you, right? They went on to healthcare.gov and filled out a form similar to this, which asked them things, for example, did your employer offer you insurance? And if you check no, they're going to send you to the next screen, right? Because you're somebody who might be eligible for a credit because your employer didn't offer you affordable insurance. They didn't offer you insurance whatsoever. So your employer filled out a multi-page, your employee filled out a multi-page application, which ultimately resulted in you getting this 1411 certification. Okay, so you've received it. Right? This is what you're holding or what you will eventually hold. And these are just some screenshots of what it looks like. So you get this, it says, Dear Benefit Manager, this person reported, right, when they applied on healthcare.gov, that either you didn't offer them insurance, that they did have an offer, but it wasn't affordable or didn't provide minimum value. Real quick note for anybody that's on EHA insurance, all of their plans provide minimum value and minimum essential coverage. That's why we gloss over those. So really, your employee would have looked at this and said, oh no, they didn't offer me affordable coverage. Or the third bullet was in a waiting period and unable to enroll in healthcare coverage. That really doesn't apply either because EHA allows folks to enroll starting the first of the month after they begin employment. So really what this person said to the government is one of these three things, probably at least the first 2 if you didn't offer them insurance.
Yeah, and so for all of you sitting out there that are holding a form, either you didn't offer them healthcare coverage because you don't offer healthcare coverage to subs, so that would be true, or you offered them unaffordable coverage because you made the paraeducator pay 50% of her premium and she says that's not affordable. So hopefully this is all like clicking now with all the stuff that we've talked about, the offers that you're going to make.
Yeah, for sure. So this is kind of the first part. We've got screenshots of each part of this notice for those folks that don't have one in hand. We've blanked out the particular district that this went to. At least I hope we caught them all. But anyway, it says, why are you getting this notice? This is kind of exactly what Karen and I have been saying. Your employee qualified for credits on the exchange. If you're a large employer, you might potentially be subject to penalty. That's why we're sending you this form so you can tell us if that person's actually not eligible for credits on the exchange. Oh, but keep in mind, on the bottom, only the IRS can determine whether you actually owe a penalty. So we're going to threaten it up here so that you help us, kick ineligible employees off the exchange, but we're not actually going to tag you with the penalty. So we're on the same team here is basically what they're trying to say in this notice. What can I do next? That's this appeal, right? Basically what they say is feel free to visit the IRS website or call the IRS. You are a glutton for punishment if you actually call the IRS. But if you go to and it's not in this, it's in the next screen capture, but basically what it says is this is them trying to lay out to you what would be the reasons that you might appeal.
The only other thing I want to draw your attention to is the last sentence on that screen. It is a violation of federal law to discriminate against employees because they subjected the district potentially to a penalty. I don't worry about school administrators so much, but I do think maybe you should visit with your board members to make sure they're not down at the VFW this weekend saying, well, that Bobby Truey, he could cost us a lot of money because he went and got his free government cheese. And so just, I don't think that we've really emphasized that in our discussions with board members, but I think we should start, and Bobby and I will start doing that.
Yeah, for sure. And it says for the appeal, for example, we want to make sure there hasn't been a mistake. And we, the government, if we shouldn't be helping your employee pay for their premium on healthcare.gov, tell us, right? Because you may be offered the employee affordable insurance. That's why I've kind of underlined those two things. You've got 90 days to file this appeal. So I've heard some people say, wow, they sent this out on June 21st, but we didn't get it until, July 5th. I think they dated them June 21st. And I think what happened is they just sent out a whole batch of them because they were supposed to be sending these out starting in 2014.
Yeah.
So it goes to show you how in line with their timeline the IRS is at this point. But from the day you received it, you've got 90 days to file this appeal. And says you send it in via fax. The key to remember, you must include a copy of this notice with your appeal. So you're going to want to run a copy and include it to make sure that you get it all in. Okay. So you've received the notification. Now you have a chance to actually file the appeal. We're going to go through quickly what this form looks like. So if you haven't seen it, we attached it to the email that Sherry sent you about 15 minutes before the webinar. We'll put it up on our website. There, if you don't have it, you still don't have it, you can Google for it. You can put in form approved and that information up there, or email us and we'll send it to you. But basically, tell us about the employer who's requesting this appeal. That's similar to the 1094 and 1095 reporting. What is your, that's all your information in Section 1. Section 2, designate a secondary contact. Real quickly on this, I think it is assumed that you as the business manager or bookkeeper is really the person that's going to be handling these things. However, I think there is still merit to leaving the superintendent as the recipient of these notifications. Because otherwise, and as we look at in Section 4, it says you are signing this appeal under penalty of perjury.
So we want, I think we want somebody with E&O insurance. I think we want the superintendent, and then this screen is where we put in the person that really knows what's going on, which is, of course, business managers and bookkeepers, you, because we love you best.
Yeah, so I think your choice is if you as a superintendent really want all communication to go to the business official, put them in here. But if you think it's fine as is, they're just going to send it to the superintendent. You do not have to fill out Section 2.
Yeah.
Okay. Section 3 is really the appeal, right? I mean, that's it. Tell us why you're appealing the determination of employee's eligibility to help with the cost of the coverage. This is why should that employee not be eligible for these the government assistance on the exchange? What is the date on your marketplace notice? That's all in the form if you've got it. The employee's first and last name, the employee's date of birth, the employee's application ID number, all that's on the form that you've received. The next part, an individual may qualify for help from the marketplace in paying for their premiums, this government assistance, if the coverage that is offered does not meet minimum value requirements or isn't affordable with respect to the employee. So one of the things they're telling you right there is if you offered affordable insurance, you should absolutely appeal, right? The second, use a space below to explain why this employee shouldn't have been eligible for the government assistance on the exchange. This is, again, what they want you to tell them is why, not why you don't know a penalty, but why that employee is not eligible for government assistance on the exchange. One of those reasons would be we offered this employee affordable coverage, right? If the employee wasn't full-time, if it's a 0.5 person that's gone to the exchange and you're like, well, the employee wasn't full-time, that answers why you don't know a penalty potentially, but it does not answer whether or not that person's eligible for government assistance on the exchange.
Or if the superintendent declined an insurance offer for whatever weird reason, didn't have insurance offered under her contract, and she went to the exchange and got assistance, and you can say, no, the superintendent makes $100,000 a year, $120,000 a year. So then you would be saying that that they don't qualify because their income was too high from the employer.
Right.
But remember, the focus of this form is on the employee, not on whether or not the employer owes a penalty.
Mm-hmm. Yeah. So we don't have actually like sample language to put in here because it really is going to vary.
Case by case.
Right. Yeah. So the question that Jeff asked earlier, what if we had somebody that's now quit? I think Jeff's form, for example, might read a little differently than somebody with an ongoing employee. Jeff's form might say, this person was employed from this date to this date, attached as, whatever proof of their employment here at the district. While they were employed, they received an affordable offer of insurance, right? That might be different than an ongoing employee where you might say in there, on this date, this employee received an affordable offer of insurance, and that affordable offer of insurance, was the employee was eligible to enroll in that insurance since last year, whatever it might be. Whatever your district has done, in other words, and whatever that particular employee looks like on paper is going to change how you fill this out. But really, that's what they're getting after is, why is this person or why are they not eligible for this credit on the exchange?
Two things. One, if you're sitting there thinking, oh, wow, so maybe I won't appeal for some of these, that's a scary thought, right? Because if you're like me, you want every chance to tell the government not to take your money that you have. But I think a lot of these employees, we may not end up filing appeals because we're conceding, yep, sure enough, we didn't offer them affordable insurance, or yep, sure enough, she didn't qualify because she wasn't full-time. That's got nothing to do with whether or not you're going to pay. So some of these, I think many of these you won't file an appeal. That's the first thing I wanted to note. The second thing is we are happy to help you fill these out. Our long-term goal is to give you the information that you need so that you can do this on an ongoing basis. You don't want to call us every time you get one of these, because this is going to be an ongoing reporting requirement, just like your W-2s or any of your other tax forms. So please don't hesitate to call us. Don't think that we don't want to help you. But our goal is not to have a cottage industry of filling these forms out. Our goal is for you guys to actually be able to do these on your own once you've done the first couple.
Right. This is similar to the 1094 and 1095 reporting. We still got a bunch of questions afterwards because each employee is unique, or could be. It's easy to know what the batches look like, but what about that particular employee with the weird circumstance? So same thing with this form. The difference is there's not like an IRS list of responses, so we're not going through those. What we're telling you is it's going to have to be an individual analysis for each of the employees that triggers this form. Again, this is a signature under penalty of perjury. Business officials, make your superintendent sign it. And I mean that sincerely, because that person has, coverage and immunity and all that stuff. It's not that you don't necessarily, but I do think somebody, for example, the primary certificate holder at the district is probably the appropriate person to sign these forms.
Yep, I agree.
Okay. So what are the grounds for appeal? We've kind of covered these, and we're going to get through this briefly. Then we'll get to all of your questions. But for those that got a split, we want to make sure to get through it quick. This is what they say. When you go to the website that they list on that notice that you got, and it says, what are the employer's options? This is what they tell you, right? Basically what Karen and I have said. Some of you are large employers. Some of you may eventually owe a penalty. What we're asking you to do is help us verify that those folks that we've given government assistance to actually are entitled to it. So employers that get a notice from the marketplace stating that they may be subject to this fee can file an appeal if they believe that they have offered coverage that is both affordable and meets minimum value standards. If you offer an EHA plan, as of right now, at least, I'm assuming for the future, you're always going to know that you can check that second box. The question is the affordability. That's why at the beginning we spent so much time throat clearing on, you really need to speak Obamacare for purposes of affordability. You need to know the offer that that person received, or the offer that person's going to receive in September, and whether or not that's affordable. You might not know if it's affordable, but that's different than knowing for sure it is or for sure it isn't.
Yes.
Right? So you need to understand that. What they've basically said here is that they really only want you to appeal if you've offered affordable insurance to somebody. I think at the end of the day, that's what they want, because that is what would then, I hate to use these terms, but kick that particular employee, that para that went to healthcare.gov and said, I didn't get an offer. They want to know if that person lied to them. And they want to know from your perspective as the employer, if you did make them an offer, was it affordable? So that's what they tell you here. This is kind of a summary of what we're getting at. But there are different things that could factor in that they don't put in this sheet. For example, if the person's still employed there, that might be pertinent information to provide to them that could affect their eligibility. So again, important, this appeal does not determine if an employer has to pay the fee. They keep trying to emphasize that you're on the same team here. Okay, so what are the grounds for appeal? We just kind of tried to do a summary here. Just like that last slide said, if you offered affordable insurance, which met minimum value and minimum essential coverage if it's an EHA plan, you should appeal. You should plan on appealing. If you met an affordability safe harbor, so for example, if your board said, we want to make sure that nobody pays more than 9.5% of their W-2, and you can certify to the IRS that the offer that we made to those folks ensures that they do not pay more than 9.5 or now 9.66% of that W-2, that they won't have paid that when you look at their W-2 for 2016, that's an affordability safe harbor. So that's something you should put on the form. It was affordable because we met the W-2 affordability safe harbor. Again, important that you understand what all that means and what your offers entail. That's it, right? I mean, that's kind of what the government has said that's pretty much it. Meaning what we kind of mentioned at the beginning, what are things that are not grounds for appeal? Wait, I'm not a large employer, right? They don't care. For example, if you're an employer that has 45 full-time employees, you're a small employer, and you offered to all of your paras full single insurance, that para is still ineligible for credits on the exchange if they told the government something else, right? If they said, oh, I didn't get an offer, but you absolutely made them an offer. The government still wants you, as somebody who will never be subject to a penalty, to tell them whether or not that person's defrauding the government, right? They want to know if that person lied to them. So it doesn't, again, remember, it doesn't matter that this may or may not eventually trigger a penalty. What they want to do is set the record straight on those people who are on the exchange, and they're using you to do that. So the fact that you're not a large employer isn't something that they care about for this form. But if you offered insurance to that para that was affordable, they want you to know that even if you're not a large employer.
Right. They don't care that you're in transition relief. They know that you're in transition relief. Again, that's on the employer side. And they don't care that this person wasn't entitled to receive, couldn't subject you to a penalty because they didn't work more than 30 hours a week. They don't care at this point. This is designed to kick employees off the, well, it's designed to gather the data about whether or not this employee is qualified for a subsidy on the exchange.
Because they really didn't, they opened the exchange late 2014.
They didn't do any checking at all.
This is the first time they're actually checking the truthfulness of those applications, which is kind of scary. But that's why we're here. That's why they're asking you to help them with that. Okay. Real quick, what happens after you file the appeal? Just so you know, they're going to let you know, okay, hey, we got it. So if you don't receive that, I would follow up with the IRS to make sure that that they received the appeal from you. They'll then send you something back which says, okay, we received it. They'll also send a notice to that employee. Right? So you've got a little bit of an employee relations situation to think through here, because that employee is going to know that you're challenging their eligibility for credits on the exchange, because that's what the government's going to tell them you're doing. So keep that in mind when that para comes knocking down the door and says, hey, why are you trying to kick me off the exchange? Again, something you might want to consider with your board. The numerous boards that I've talked to have been kind of troubled by the dichotomy between offering affordable insurance and kicking people off the exchange, right? We know we've got 3 paras that are on the exchange, and they get a much better deal than if we offer them 50% of a single and it's affordable. So some boards have really thought that employee benefit and employee relation aspect of it important. So you might consider talking to your board that, hey, now we're starting this implementation process. Let's talk through what these appeals mean for the employees. Okay, and then this is just, again, a list of the stuff that we talked about from the beginning to sort of fit in where we're at. You're also on that employee that was employed at some point in 2016 going to do the reporting for 1094 and 1095C if they were a full-time employee, right? So if you got a 1411 certification on somebody who was not a full-time employee, the fact that you don't send in a 1095C is the trigger to the IRS to say, oh, that person wasn't a full-time employee, right? So you see how there's
other chances for you to give them that information.
All the defenses that you have are still coming down the road. It's not wasted effort to be thinking about those things. And again, y'all let you cover this real quick, Karen.
This was just sort of our summary. So if you're deciding if we should appeal, I think you should 100% go back and check if you did send out offer sheets to staff, see what that person filled out, check the information that you put down for the 1095C from last year for that employee. Did you mark them down as somebody that received an offer? Mm-hmm. One thing you might want to think about is a lot of schools are going to start offering insurance to classified staff starting September 1, 2016. If you are one of those schools, you might want to wait and not fill out this appeal form until after that employee starts getting that affordable insurance offer. And then you fill out the, so Bobby qualifies to get insurance on September 1st. On September 20th, I send out the form now that says, yes, we're appealing because Bobby shouldn't get credits because we started offering him affordable insurance on September 1st, 2016. That will make the record really clear about when Bobby was entitled to government assistance and when not. So that's one little nuance that you might want to think about if you are one of those schools that's going to begin making offers as of September 1st. Exactly.
That will line up with your telling the IRS in your 1095 reporting that we had transition relief through September as well, right? So you're painting a picture, right? If you're Bob Ross, you're painting a few of the little things in the corner right now, and then you'll kind of finish fleshing that out as you move forward.
And then, because we just haven't said it enough, I'm guessing that a lot of you will end up not appealing a lot of these, and just, take comfort in the fact that that does not mean you'll automatically pay the tax. Mm-hmm. Okay, so this is a great cartoon that I want you to have a chance to read and laugh hysterically at. And then we're going to stop sharing the slides and go back to the, go to stop share. Yep. And so then the questions should be up here.
We're going to move up and go through the questions here. So if you have them, send them in. All right, I think we got Jess. If you had an employee that quit, anything you need to do, just think through how you might note that on the appeal form. Do I send in the insurance waiver that the employee signed when he declined the offer along with the application? Absolutely.
Yes.
Right. One of the things we didn't put in here, but these forms make pretty clear, any supporting documentation you have, go ahead and send that in with it. This is, by any other definition, sort of like an unemployment request form, so that normally, the contents of a personnel file are protected. We believe that avoiding the tax penalties under the Affordable Care Act, or even as a small employer, assisting the government in their verification checks here, that is a reason under our personnel file laws that you can share this information with them.
Yeah.
So I think you ought to, if you have, here was the offer sheet, here was their declination form, here was the EHA application where they checked, I don't want it. I would make a copy of that stuff and attach it to your appeal. So the appeal form, a copy of the actual notice that you received, remember, because they want a copy of that, and then your supporting documentation. Shoot one of us an email if you've got a question about that supporting documentation, but anything that verifies that we made an affordable offer is absolutely something that you're going to want to include.
Yes.
And that employee turned it down.
Yes.
Sure, but that should show the same thing. Okay. If the employee that quit was a para and we're not offering affordable coverage until September 1, do we file the appeal? Maybe not.
If a para that quit was a para, they're not offering.
Because here's what's going to happen. So
I think
I probably wouldn't appeal because you didn't offer.
Nothing makes a lawyer's heart hurt more than saying don't file a legal document. So that's why I'm struggling. But I think that's the right answer. I don't think you should file that appeal because the eligibility for governmental assistance really has nothing to do with whether or not she's a continued employee who could get insurance now.
One, I guess Karen does have a heart, and two, the question of whether somebody is eligible on that exchange, right? You have to be okay with the fact that they could be eligible based on what your insurance offers look like.
Yep.
That's not a bad thing, right? The law was specifically written to try to capture as many of those folks who either weren't getting offers or weren't getting affordable offers as possible. So it's okay. Jeff asked the question. It's okay that person was eligible at the time that they were employed by you. That's perfectly fine.
I don't think I'd appeal.
Right, because what you'll do is you'll note in the 1095 reporting for that person, if they were full-time when they worked for you, that person didn't receive an offer, but we had transition relief, right? Or they did receive an offer, but they quit in May.
But you do that, right, on the 1095, not on this form.
Exactly. So it's all supposed to fit together. That ELF looks at everything, at least in theory. Okay. From Keith. Offering at least single coverage at the $900 deductible, the same insurance we offer our single teachers through EHA to all of our full-time employees will make sure we avoid penalties, correct? I think so, yes. If you're offering, if you remember, the affordability stuff is based on the cheapest single you offer. So if you're offering a dual rate plan, right, and one's HSA eligible and has a much higher deductible but lower premium amount, affordability is based on that amount. If you're just offering a traditional, Keith, it looks like a traditional $900 deduct plan that you offer your teachers, you're offering the full single, that will avoid penalties. So if you haven't offered that yet, but you have in hand one of these forms, that point that Karen brought up about waiting until after September to make the report might be worth your time, only because you're then in control of what's painted on that picture a little bit more. So if we do not appeal, sometime down the road, we'll get something later where we say we are a small employer or the person was part-time. Yeah, absolutely. And in fact, you may never get that because you're not making, if you're a small employer, you're not going to make a 1094 and 1095C report. That is what the IRS, so if I'm the IRS and I say Mr. Small Employer, Ms. Small Employer School District in Nebraska didn't file, that's somebody who I am then going to say, okay, they made the determination that they're a small employer, right? They're not even covered by the pay or play or the reporting requirements. You might be an unlucky person who gets an audit where the IRS is going to come out and make sure that you're actually a small employer, just like your taxes on an individual basis could be audited every year, right? So that's why we're saying even as a small employer, you should continue to track those hours, run your large employer number on the spreadsheet to make sure that you stay a small employer for purposes of that process. But really all we're talking about is sufficiency of your documentation. So if you don't appeal, you may never hear from the IRS again, and that's perfectly fine.
It's just if you're a small employer, think of it this way. It's just the IRS double checking to make sure that you didn't offer this person insurance that they turned down and then went to the government exchange instead.
Right. If we offered insurance to paras last year and they declined, we have to offer insurance this year again. If they decline this year, we have to offer them next year, every year, correct?
Yes.
That's specifically because the Affordable Care Act is based. The penalty calculations are annual. all of the counting calculations under the Affordable Care Act are annual. Therefore, they say your offer must be annual, right? That's why EHA has allowed open enrollment every year. And that's why they've now got an opt-out system, opt-in, opt-out of open enrollment system. Yes, even if that person, even if Sally's husband that works for the railroad, right, that we talked about, you're going to have Sally check no on your
Every
offer
single
sheet
year.
and on that EHA application every year.
Yep.
So like we talked about though, you offered last year, it's understood that they could enroll this year if they wanted. That might be good enough, but don't chance it, right?
No,
Get your documentation in line, which says we offered every year and they said no every year.
Yep.
If food service staff and paras are held at 35 hours per week and not eligible for health insurance, should they be offered the insurance if they pay full or reduced premiums?
Wait.
Okay. James,
Food service
let's try
staff
to.
and paras are held at 35 hours per week. Well, and not eligible for health insurance. Should they be offered the insurance if they paid? Okay.
Real quick, couple things to unpack is there. I'm assuming that they're held at 35 hours a week because when you do the math and put their hours of service divided by their weeks of service, that 35 hours a week based on all the natural breaks that schools have, that means that they're under 30. That's the concept, is that they're not going to be over 30. I see James shaking his head. So okay, we wanted to make sure that
was our first concern.
Yeah.
Is that it was like, crap, James, it's 30, not 35. But I understand what you're saying now.
So if the assumption is that these folks are not going to be full-time for purposes of PAC accounting, the question is, should they be offered the insurance if they pay full or reduced premiums? You can elect. So for example, this is a question of where your board sets its own eligibility line. The Affordable Care Act says you must offer to the sufficient amount of full-time employees. That does not prevent your board from offering to anybody who's otherwise EHA eligible, right? So anybody that works 20 hours a week or 16 or whatever their mandatory minimum is, your board could still elect to say to that person, we're not going to pay a dime, but you go ahead and buy it if you want. What that means for you, James, is that you've made an offer to that person, but for PPACA purposes, it's irrelevant, even if it's unaffordable, because they can't subject you to penalty because they're not full-time.
If I was on a board of education, I would be tempted to vote to offer those people insurance on their 100% on their own dime, so that the hours calculation will not be quite so critical in terms of potentially subjecting us to the death penalty.
Mm-hmm.
Plus, I just think it's good employee management, right? You take you take whether or not you want this, you can go on the exchange or not. We'll all concede it's unaffordable and you would be qualified for a premium credit on the exchange.
Mm-hmm.
But it's also a perfectly valid decision for the board to say, no, we're just not even going to mess with that. I think now that EHA has waived its underwriting guideline that requires us to pay a portion of the employee's premium, I would be tempted to offer it because I don't think that there's a big cost to it. But there are perfectly valid yes and no answers across the state. Boards have done different things.
One of the reasons, kind of as a counter consideration to that though, is because this is all how you write your subgroup application, right?
Yeah.
If you say anybody that works 20 hours or more up to full-time paras, we're offering them insurance, but they have to pay the full single. What you've done probably is guarantee that your usage rate isn't going to be high enough and you're going to get hit with that surcharge, right?
Yeah.
So there are considerations in there for why your board may or may not make that offer to these folks who you've intentionally held below full-time status. The point there is that's a board decision and really outside of PACA penalty sort of stuff. I tell boards when I give in a presentation to them, that's an employee benefit question, not a PACA question. Okay. Do we need to get waivers every year from anyone who declines coverage?
Yes.
I would, right? It's just, if you send one of us an email, we've got kind of an offer sheet that we put together, which you can fill out with what your board's offer is going to be. It's got a box in there which says, yes, I intend to enroll and have been provided with a copy of the EHA enrollment form, or no, I intend not to enroll and make that certification now. So from Keith Leckrun, and we pay the entire premium. So if what you're saying, Keith, is you pay at least the full single, but even up to full family, no doubt that's going to be an affordable offer, right? The question the little elf is going to ask, based on the cheapest single you offer, did the board require the employee to pay more or less than 9.66% of their household income? If you always offer at least a full single, always going to be affordable because their contribution toward that is $0 and 0% of their household income. They have to pay out of pocket to enroll other family members, but that has no impact on affordability because it's all based on the single.
Yep. Is that it? Yeah. Hey, well, we set this for 45 minutes, and I told Bobby I was hoping we'd slam it in an hour. So I think we've met that. So here's where we're going to leave this. I think I'm going to send a SurveyMonkey out. I'm just interested in you guys' reaction to this. We have sent the slides out to you. We'll put them on our website. We'll also put the recording. So I don't think there's any other follow-up that you guys would need from us, but if there is, obviously you can always call or email or whatever. Sure. I'm getting harassing text messages, so I may be filing a defamation claim against Bobby since he said I had a heart. But other than that, I hope this was really helpful to you, and we do really want your honest feedback on the SurveyMonkey because we're experimenting with these different formats for how to do this.
Right, and if you've got questions on, like, if you're holding a stack of these and you've got a question on a few of them, just like the 1095 reporting, we're more than happy to get on the phone for 5 minutes to help talk through each of the different sets of demographic information about each of these folks if you want help actually filling out the form. So
I think that will be cheaper than having your bookkeeper struggle for 6 weeks. And again, our goal is to get whoever's filling these out the training and the help so that they know how to do it next year too. Okay, well, thanks everybody, and we will record this and have it up on the website here in the next hour or so. Bye.